Hey there, everybody. This is Greg Gossett. How you doing? Hope you had a good weekend. I appreciate you coming to the Gossett Trading and Mentoring Weekend Review, where I'm going to cover my trades of last week. We're going to talk about when I bought them, why I bought them, how I'm going to manage them going forward. We're also going to do a little bit with some trader psychology today. We're also going to do a fun trading poem after that. I have gone down through my watch list of stocks, the watch list that I look at, and I will point out some things that I'm looking for next week for some possible entries. And so that's what we're going to do today. I hope this podcast is helpful for you all. Glad that we had a little market rally. Oh, by the way, today is July 10th, Sunday, 2022, just so we get that in there. So that we have a timestamp on that. So yeah, that's what we're going to do. First thing, we are going to run the U.S. legal disclaimer, get that out of the way, come back, take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them going forward. We're going to switch over, talk about trader psychology, trading poem, and then like I just mentioned, I have flagged about 9 symbols that I show some interest for me for next week. Actually 6. I also put the SPY, the Dow, and the Qs in there so we can kind of take a look at the market as a whole. But that's what we're going to do. So hang tight. I'm going to run the U.S. legal disclaimer, and then we will get started with it. So hang on there for a second. I'll be right back. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, thanks for hanging in there with me. All right, let's get started. So first on deck is Pfizer. Pfizer has been a really, really good trade for me. I did buy this all the way back here on June 17th when I had a confluence combination of indicators lining up. And the indicators are as follows. We had 2 on the same day. We had an intraday rejection of the 30 RSI. That is one valid signal for me to enter a trade. We also had an intraday rejection of the 300-day moving average. So I bought this back here, 617, bought this at 46.56. First thing, when I look to enter, first thing I want to do is I want to position size based upon the current market volatility of what's going on. The market volatility is higher. I'm going to buy fewer shares. When it's lower, I'm going to buy more shares. So what I do, and I guess we'll just do this one here, but I always get a lot of people asking me about this. Now, how do you position size? This is what you do, everybody. At least this is what I do. Okay, I'm not recommending, but people ask me what I do. This is what I do. So whatever my account is, let's just start with a hypothetical $100,000 account. Let's just say I have a $100,000 account. 1% is a good rule of thumb of the maximum amount that I would lose on any one trade. So 1% of $100,000 is $1,000. Okay, so what I do is I take my trusty little calculator, and what I do is I take whatever that maximum allowed loss is. So if you have a $50,000 account, then a good rule of thumb would be 1% of 50,000, which is 500 would be your maximum loss. If it's 25,000, 1% would be 250. You get it, right? So for this hypothetical $100,000 account, 1% is $1,000. So I would take the $1,000, divide it by the value of the 2 ATR. ATR means average true range. So what happens is it adds up the true range of the high and the low of each bar over the last 20 days, divides it by 20, that gives you an average. That will give you the average of the 1 ATR. Now I times that by 2 because I want to have my maximum allowed loss, 2 standard deviations outside of noise. If I kept it inside of 1 standard deviation, then it would be inside of noise. It would be expected. All right. So $100,000, 1% is $1,000. I take the value of the 1 ATR, which is $3.04. So I take the maximum allowed loss, 1,000 divided by 3 0.04, it would tell me to buy 328.9 shares. I would round that up to 329. And so here's my entry, right? My maximum allowed loss is $3.04 below. Well, if I take $3.04 by 329 shares, it's going to be roughly $1,000. Okay. So does that mean that I'm risking $1,000 on every trade? Yes, technically, but I have two types of stocks, right? I have a maximum allowed loss. So if the price ever got down here, and I am an end of day trader on these swing trades. So if I don't do anything unless the end of the day comes, because I feel like the end of the day is the most valid price of the day, because the large financial institutions get in there at the end of the day. They make their moves. They show their strength. They have very smart people, the best information, best technology, and dealing with the most money, right? And so I want to see what they're doing at the end of the day, if it's holding my levels. However, this maximum allowed loss down here, if everything goes to HE double toothpicks, which it does, then I know that if it gets to my maximum allowed loss, whether it's 1 minute after the market opens or 1 minute before the market closes, I know where to get out. So just to reaffirm here, if it ever gets to my maximum allowed loss, I get out immediately. I do not wait for the end of the day. So that is what this line is down here. It is exactly $3.04 below the entry point, or when I bought it. So let me be more specific. So when I bought it, let's see, let's go over here. There we go. When I bought it, I didn't divide it by 3.04. I divided by 2.86, but the volatility has increased. All right. So hope that makes sense. So I have the maximum allowed loss. So if I ever get to my maximum allowed loss, I know how much I'm going to lose in this case, right? It was $1,000. But then I have my end of day stop too. 95% of the time, your end of day stop is going to kick in, not your maximum allowed loss. About 5% of the time, your maximum allowed loss is going to kick in. So here we go. What was my end of day stop? Well, my emergency stop down here, pink line. The end of day stop would have been a close below the 300-day moving average, or the 30 RSI, because they both happened at the same time. But I decided just to go with the 300-day moving average. So bought this 46.56, have my maximum allowed loss here, have my emergency stop. I'm sorry, my maximum allowed emergency stop here. I have my end of day stop here. But fortunately, this trade went my way. Now, also, I do phase out of a portion of the position every time it moves the value of 0.45 ATRs from my entry. So right now, you can see on the current bar, it's 0.68. So I would take my current price of the stock, 53.83 or 53.18. I would add 68 cents to it. That would give me my first profit target for Monday. I would take my first profit target, add that again to it again. That would be my second profit target. I take my second profit target, add this value to it again, and it changes every day, by the way. And that would be my third profit target. And so I would place a limit order. I would have 3 profit targets. I would place a limit order for 10% of whatever the position is that I have going into the day. So the reason I mention this is that do I have the whole position from here, from 46.56 up to here? I don't, because I phase out every time, like probably one profit target here, another one there, another one there. I think there were 2 there. Here, we got up to my trailing stop level. Trailing stop level is always 1.5 ATRs. Here it is right here, above my entry signal. So I have my entry, I have my emergency stop, I have my end of day stop, then I have my trailing stop level, 1.5 ATRs above. Once it hits there, I go into trailing stop mode, which doesn't really mean anything at the moment, but it means that if I get a close below the previous day's low after reaching 1.5 ATRs, I get out. And that's what happened here. So I bought here at 46.56, moved up nicely, got to my trailing stop level. It doesn't mean I do anything, but I'm in trailing stop mode. And then here I get my first close below the previous day's low. So I got out of half of whatever I had remaining at $50.71. Now, if it went down, I would be glad that I sold half. If it goes up, I'm glad that I still have some remaining, and that's exactly what happened. So I took half profits here of what I had, went out, it closed below the previous day's low after reaching trailing stop level. And then we had some movement bouncing around, took another profit target here, took another profit target here. Don't think I took one there. And so right now, this particular trade, the remaining portion that I have entry to current price here is about 12.43%. So if I get a close below the previous day's low, do I get out of another half? I don't, because that already happened here. So going forward, if I get up to a 65 RSI, then if I have a close below the 5 EMA, I will get out of the entire position. If it keeps moving up, rejects the 70 RSI, I would get out of half. After rejecting the 70 RSI, if I got a close below another previous day's low, I would get out of the rest. But anyway, so far so good. Really glad this trade. The remaining portion I have up 12.43%. All right, let's take a look. I only have two positions here. I have Alibaba. I bought Alibaba on the weekly charts. Just want to mention that I do trade multiple time frames. I day trade all day long. I trade daily swing trades. I trade weekly swing trades. I trade monthly swing trades. It's one of my philosophies in trading. Get as many different trading time frames as possible, use as many trading strategies as possible, and trade a wide variety of markets, not just equities, but even get outside oil, gold, bonds, silver, dollar, so forth like this. So on this particular trade, same thing. This just happened to be on weeklies. Weeklies close on Friday, so that's the time for the weekly to make the weekly decisions. Right here, I bought Alibaba with this V1. Here's a V1. V1 consists of two bars, bar 1, bar 2. Bar 2 washes out the low of bar 1, closes above the close of bar 1's close. And so I entered here at 93.03. Same with the Pfizer. I position size based upon volatility. I place my emergency stop here. I have my end of day stop here. End of day stop on a V1 is a close below halfway the washout bar. This was the washout bar, and we've never closed below there, so my end of day stop never came into effect, or actually more specifically my end of week stock. And the purpose of this podcast is just to show the trades. I try to explain, what I'm doing, so forth and so on. If you'd like to learn the nuts and bolts of this, if you'd like to learn exactly step by step what I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I teach you all 5 of the different trading approaches that I use. Like I said, I teach them step by step. When you're done with this class, you will know exactly how I trade. There's no, gray areas. It's black and white because it's very step by step. So if you're interested, I'll mention this at the end of the podcast, but please drop me a line. We can set up a Skype call. The cost of the course is $1,750, but it's worth every penny. But if you're watching this and go, okay, what is that? How does it, if you want to take my course, I will teach you everything. All right. So here's Alibaba again, started with the V1, took my entry at 93.03, placed my emergency stop. I know where my end of day stop is. I placed my 1.5 trailing stop above my entry here at 114.40. 2 weeks later, it got there, but it rejected the 50 RSI, so I took half off for a 15.32% gain. Continued to move up, a little sideways here or slightly down, and another move up here. So this particular trade right now has been a good one. It's been a great one. Entry to current price looks like 23.28%, right around there. Now, you can see the 50 SMA is above us. If we reject that, I will take another half of a half, whatever I have, half of a half off. And then if I get a close below the previous bar's low, I'll probably just get out of the entire trade. But this has been a great trade. Very happy for it. The remaining balance up 23.28%. And over here on Pfizer, the remaining balance up 12.43%. So not too shabby, huh? Not too shabby at all. All right, so let's go ahead and talk a little bit about trader psychology. It is the most important part of trading. I can promise you, I would say the second most important part of trading is your position size. But trader psychology, man, listen, we all battle with it. I do. I've been trading for almost 27 years. I still battle with it, right? I certainly have a lot of experience in trading, but I still battle with it. Right. So I do want to mention this to you and try to make you aware of how important it is. And that's why I like to read these. So this is from Stephen Goldstein. Stephen's a great guy. He was a professional trader. He's at Alpha Mind 101. He is a world famous trading coach. You may want to look into him, follow him at Alpha Mind 101. He has a great podcast. I was fortunate enough to be interviewed twice on his podcast. Just a great guy. He does a great job. He interviews traders from all over the world at all different levels. So it's kind of like trading the Trading Wizard's books, but in podcast form. So please follow him and let's see what he has to say. To succeed at anything, you just earn the trust of those you work with. To succeed at trading, you must earn the trust of yourself. Pretty good, right? Pretty deep and right on point. To succeed at trading, you must earn the trust of yourself. We may believe in ourselves, but the reason we often lack discipline, patience, and or panic is we rarely trust ourselves when trading. Boy, this really hit home to me, everyone. You do have to trust yourself. I mean, listen, I'll be completely honest. There are days where I wonder if I trust myself. I'm just being completely honest. It really is true. Most of the time, I'm pretty good with it, but there are days where, I'm having a day and so forth and so on. And so this was a good reminder for me, and that's why I picked this to talk about today. You have to trust yourself. And what do you have to trust yourself for? You have to trust yourself to follow your plan, everyone. And this is from Ralph Waldo Emerson, very famous. Self-trust is the first secret of success. And in trading, could not be more apropos. So to succeed at everything, you just earn the trust of those that you work with. To succeed at trading, you must earn the trust of yourself. We may believe in ourselves, but the reason we lack discipline, patience, and or panic is we rarely trust ourselves when trading. So we need to work on trusting ourselves. And how do we work on that? We follow our process and start realizing, okay, I did what I was supposed to do. Okay, I did what I was supposed to do. Oh, it was a loss. Oh, well, but I still follow the process. So this is a very important post by Stephen and spot on, and I wanted to share it with you. But please follow Stephen Goldstein at AlphaMind101 over on Twitter. Thanks, Steve, so much. Appreciate that. Okay, so let's switch over. My good friend Frank at FrancoD over on Twitter. Please follow him. He's a great guy, great musician, great trader, great poet. He writes a poem every day about trading based upon what's going on. And let's see what he had to say today. There's much about trading you learn by yourself. It's true. The meaning of words from the books on a shelf. Trading is discovery, like a stock price itself. Talk about self-discovery. Trading will teach you everything you know about you. If you were to know me just outside of trading, I'm kind of funny, right? I get along. I don't take things too serious. But when I trade, I am another person. You would not even recognize me. I swear like a sailor. I throw things around like a little child, but it's just part of my process. I yell, I scream, mainly on day trades, but it's my way. It's my way to kind of get those emotions out and so forth. So you will learn a lot. Trading will do a lot to you. It will bring parts of you out that you really were not aware of and other people were not aware of. Sorry, Ava. Have to apologize to my trading partner, Ava. She has to put up with me each day during this. Thank you, Ava. You're the best. Let's read it one more time. There's much about trading you learn by yourself. The meaning of words from the books on a shelf. Trading is discovery, like a stock price itself, and you will discover a lot of things about yourself in trading. Thank you, Frank, and please follow Frank at FrancoD over on Twitter. All right, here we go. Let's take a look at some possible entries for me for next week. AGQ on the daily. Well, I've talked about this multiple weeks. We've never really gotten back over the 30 RSI. Right now we're at 26.79 RSI. If we were to close above the 30 RSI, I would enter AGQ. I would have to position size for the volatility. I place my emergency stop. I place my end of day stop. I would place my trailing stop level 1.5 levels above. The one thing that I like about this trade, I'd like to look for multiple confluences of indicators or levels, especially on multiple time frames. AGQ, okay, it's 26.79. We do not have a above 30 RSI yet, so there's no valid signal. But if we look over in the weekly, I like the weekly. Look, see the negative third ATR channel here? I really like this because I know 92% of prices stop going down at the negative third ATR channel, go sideways and or go up. So in the bigger time frame, I like weekly at the negative third ATR channel. I just need a valid entry signal over on the smaller time frame, which is the daily, with the close over 30 RSI. So AGQ definitely in my sights for next week. Dow Jones, nothing in my sights for the Dow Jones, but it is an index that I wanted to go over. Well, obviously here was the bottom down here near the 30 RSI level. We rallied into the zone. We came back. We had a nice V2 here, which would have been a good trade and you would have still been in the trade. But if I'm looking, this is a new trade, I'm a little concerned here. See how we're up against the 1 ATR channel? That's going to act as resistance for one. That's going to act as some kind of resistance because it's one standard deviation away from the mean. We also have the 50 EMA, we also have the 50 SMA over here, and we have this big bar, this big down bar that was larger than 1 ATR, and we're stuck inside the range of that bar. So being stuck inside this range, having the rejection of the 1 ATR channel, having the 50 and the 50, the 50 EMA and the 50 SMA is concerning to me. So no trade here on Dow for me, but I just wanted to go over the index to show you why I'm a little concerned. It could go up. There's no doubt. It obviously could continue to go up, but I'm seeing a lot of areas of resistance here, so I would not be surprised with a little bit of a pullback. All right, gold. Well, gold, very similar to silver. Again, if we look at gold on the weekly, look, we've bounced off the negative third ATR channel. I like that. Again, I like that bigger time frame. I like that, but now I need a legitimate entry signal on the weekly. Well, it's 2687 on the weekly, on the daily time frame. I like the week, I like the position, I like the support of the negative third ATR channel, but on gold, I would need this to close above the 30 RSI for me to get involved. All right, let's take a look at Goldman Sachs. Goldman Sachs, I really do like this. I was talking with my trading partner, Ava, when I was looking at swing trades. You see the sideways motion that we have here? Well, I'm looking for a 520 crossover. This little blue line down here is the 5. The thicker blue line is the 20. I'm looking for a 5 to cross over the 20. And I don't take any crossover. I know some people do, and they do fine with it, but I have found in my experience that the best crossover trades come after you've had sideways motion. So there is a lot of sideways motion right here. So if I get a 520 close, the 5 EMA closing above the 20, that's where I would take the trade. A little tricky thing though, we do have earnings over here on the 18th. So I don't hold through earnings, but ideally after this sideways motion, if I get a 520 crossover, I would buy, because sideways motion and a 520 crossover, especially on a stock like Goldman Sachs, which does back test well with the 520, I think that increases your chance. The sideways motion, 520 crossover, MACD's green, it's good, but I would have to get out before earnings because I don't hold through earnings. All right, next on board, Philip Morris. All right, let's take a look at Philip Morris. Philip Morris is at a 3377 RSI. I'm looking for one of the following: an under 30 over 30, an intraday under 30 over 30, a close under, close over 30 would also be legitimate. And what I like here, you see this low we have, you see how deep the MACD bars are? This means there was a lot of selling momentum to the downside. That's why these bars are so deep. I learned this from studying with Dr. Alexander Elder, double bottom bullish divergence. First step, you need to have a low with deep red MACD bars. You have to have a rally, he calls that breaking the back of the bear, and have some green MACD, which it has. Now, we've had another leg down. We are lower than this first low, but you see the depth of the MACD bar, the red bars here. You see how these bars are not as deep as these bars. That's showing some drying up of selling momentum, and the implication of that would be that we're going back up. So even though we have a double bottom and bullish divergence, I still need a valid signal, and there's some potential ones here. First would be if we head down lower, we go under 30 over, that would be one potential. Or if we close above the 200-day moving average, that would be another entry. So that's what I'm looking for on Philip Morris next week, either an under 30 over 30 or a nice clean close back above the 200-day moving average, and then I would use my 200-day moving average as my end of day stop. All right, let's look at Qs. Not interested in Qs, but just wanted to look at this for the index sake. We did have a 520 crossover, which does backtest well on the Qs for sure. But what I don't like about it here is it's stronger than the Dow. We got above the 1 ATR channel, but you see how we have the 50 EMA and we have the 50 SMA as resistance. If you look to the left here, we also have a lot of these gaps, which in my experience, if when we get to these gaps, we're probably going to stop, maybe go back down. So I would love to see the Qs come back in the value zone, move sideways, then have a V1 or a V2 entry. That is what I am looking for on the Qs. But we are at some resistance on the Qs. We have rejected the 50 SMA. All right, here we go. SPY, same thing. Do not have any potential entries on SPY here, but just wanted to look at the basic structure of the market. Rejected the 1 ATR channel, almost have a 520 crossover, which doesn't backtest well for the SPY. Still inside this big bar here. So my guess here on the SPY is that we are going to have a bit of a pullback, or if we keep going higher, probably get stopped here at the 50 EMA or SMA. I don't know for sure. Earnings happening. Never know. All right, Verizon. I really like Verizon, everyone. And the reason I like this, and this would be a weekly trade, not a daily trade. And last week I talked about ICT, the ICT channel on YouTube, which you should subscribe to and watch because he teaches fair value gaps. I love them. I love them. My trading partner Ava taught me about them. Not going to teach them here. And that's why I'm suggesting just go to his channel and have him teach you. But essentially, you're looking for liquidity. This is a multiple point level of liquidity. We had a huge move down, took out the pivot here, which changes the market structure. After the market structure is changed to the negative side, any pullback into this fair value gap in between this bar here, the low of this bar here, and the high of this bar here. That's why I marked the two gaps here. This is where this should fail. But kind of combining what ICT does and what I do, I know there's a value gap here, but I'd like a more precise entry. And the more precise entry would be a rejection of this 200-day moving average, the black line here. The structure change has changed to the downside. We've had a counter trend rally back up into the gap, but I want a precise entry. And so my precise entry here would be a rejection of the 200-day moving average to the upside. If we either just went above it and then closed below it, that would be an intra-week rejection, or we close above it, close back below it, keeping in mind we have this big value gap here. Now, again, we have earnings coming on 7/22. So, at the end of the week, I may take the trade, but I may be in the trade for 3, 4, 5 days or something because I'm not going to hold through earnings. Or maybe it just never triggers, and then after earning it triggers, then I would still take it. Okay, but this is on the weekly, and then on the daily, I'm looking at Energy Select, XLE, the energy ETF. Well, it did do what it was supposed to do. You see the intraday rejection of the 200-day moving average, pretty nice. Right? Pretty nice, and it is profitable. I did not take this trade, but coming this week, if we do come back down, either close under 200 or back over 200, that would be a higher low close back above the 200 because this was a lower low here. See how this is lower than here. Lower lows are fine, but what I've found with lower lows is they bounce a little, then usually come back down. If we could come back down, close under, back over the 200, or intraday rejection of the 200, that would be a higher low close above the 200-day moving average, which in my experience is a better entry point. It's more of a longer leg up, potentially, than just a lower low. So what I'm looking for in XLE would be a intraday rejection next week of the 200. So real quick, let's go through these again. AGQ. I like the weekly because it's at the negative third ATR channel. On the daily, I'm just looking for a close above the 30 RSI. That's what I'm looking for. Gold, same thing. I like the weekly because we're at the negative third ATR channel, very close. The entry signal for me on GLD or gold would be a close above the 30 RSI. Goldman Sachs, we've had this nice sideways motion. I'd like to see a 520 crossover. That would be my entry signal, keeping in mind earnings. Philip Morris, double bottom, bullish divergence. On Philip Morris here, two potential entries, either an under 30 over 30, that would be entry number potential number one, or a close above the 200-day moving average. Usually with when I do this podcast, it either needs to go lower or it needs to go higher. And in this case, either is going to work, either an under 30 over 30 if it goes lower, or a close back above the 200-day moving average. Verizon, again, on the weekly, we had a structure change to the downside. We've checked back into the fair value gap. Please check out ICT videos on YouTube. What I'm looking for is an end of week rejection of the 200-week moving average. And then over on XLE, I'm just waiting for some kind of bounce, intraday rejection of the 200-day moving average, or a close under, close back over, and most likely it would be higher low close. So that's what I'm looking for. I hope that makes sense to everyone. I hope it's helpful. I mentioned at the beginning of the podcast that this is kind of a high-level overview of what I do. If you would really like to learn exactly how I trade, how I set up these trades step by step, have somebody watch over your shoulder, and teach you one-on-one. I do teach private one-on-one lessons in the evening time via Skype. I teach all 5 of the different trading approaches. I show you everything that you need to do, from position sizing, emergency stops, end-of-day stops, trailing stops, intraday rejection levels above. It's a great class. I've taught so many people from around the world. It does cost $1,750, but I promise you it's worth every penny. So if you're interested, there is a link in the description of this YouTube video. It has my email address. Just email me, say, Greg, I'm potentially interested in taking your course. I'll reply and say, hey, great. It would be great to work with you. Let's set up a Skype call. Skype call is free. It's not a sales call. I promise you that. I just want to learn more about you, your trading challenges, your goals. And it's a great time for you to ask me any specific questions about the course. And when we're done with the call, I will not contact you. I promise you. I'm going to leave that up to you. And if you wake up one morning and say, hey, today's the day, I want to take this course, just email me. We'll get it all set up. All right. And you'll be happy that you did. I promise you. You're going to be a much better trader. Secondly, if you like online courses, I do have a course called the Deep Dip by Stock Trading Strategy, which is such a great value. It's over at udemy.com. I have a link in the description of this YouTube video. Best part, it only costs $12 or $15, but it's loaded with content. It's 9.5 hours of video. It's 26 videos total, 15 study guides. And like I said, it's 12 or $15 depending on the day. So, if there's a place you want to start, the one-on-one lessons obviously would be the best because it's one-on-one. But if you want something a little bit more affordable in your price range, take the course on Udemy. I promise you it's going to dramatically improve your trading. And then lastly, if you like this podcast, if you found it helpful or previous episodes helpful, all I ask is that you would hit the thumbs up button. Just lets YouTube know that it's valuable content, it's helpful, so they can get out and share. There's a lot of people that need help with trading, I promise you, and you can help me help them by just hitting the thumbs up button and or sharing it on social media if you don't mind doing that as well. But I really appreciate you being here. I hope you had a nice weekend. I hope you have a good trading week ahead. I always like to mention this. Please try to go out and do something nice for another human being today. If we all did that every day, it would make the world a better place. And if you have it in you, if you could go out, maybe do something nice for an animal today as well, I would really appreciate that. I was raised with animals. I know they love acts of kindness just like any human would. And so, it's my goal every day. Try to go out, do one nice thing for another human being. Try to go out and do one nice thing for an animal. And if you do, I hope that one day if you need it, somebody will be there for you to do a good act of kindness for you as well. But I hope you have a good upcoming week. Be good, be safe, drive safe, study your charts, take some time to do some presence work, do a little breathing, visualize some good things. But like I said in the market psychology section, you have to trust yourself, everyone. Follow your process. It's the most important thing. If you have any questions or comments, just please leave them below. Really would appreciate that. And so on the way out here, I have to run the U.S. legal disclaimer. So thanks again, everyone, for coming. All right. And I will talk to you next week. Thank you. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.